Ever wondered what it's like to trade using one simple strategy that provides you with clear setups without overthinking or chasing trades? For me, this wasn't just a theory. After backtesting for months and focusing on structure, liquidity, and timing, I found one clear entry model that flipped my results. In this video, I will walk you through it step by step. So if you have been confused by SMC smart money concept or liquidity inducement theorem before, this might clear it all up. With just 3 proven steps, you will be able to identify the bias or direction of the market, the point of interest, and the most important factor, the liquidity, so you don't become the liquidity itself. Let's start with the basics. Step 1 is always identifying the direction of the market. You need to know if price is trending or bullish or bearish. And the cleanest way to do that is by watching structure. In this case, price breaks a previous high, which is this one, the recent high, a bullish break of structure. This is a bullish break of structure. So now we expect a pullback. What we want to catch is the higher low of the move. The demand that will drive, you can call it demand or order block, point of interest, it doesn't matter. Once we have this break and the recent high is broken with large movement, we are looking for the point of interest. We move to step 2, marking the point of interest. That could be a demand zone, an order block, or a Phillips zone. It depends on your model, but it has to be the level that led to break. I mean this one, this high, the recent high, the break of this recent high. Once we mark the point of interest, we set alerts. The idea isn't to chase trades. We let price come to us. When price taps into the zone, that's when we start watching closely. Before price came back to make higher low, the price needed a liquidity to fuel the move. It had to first build up liquidity. Price made lower high, then broke again, made lower low, lower high, lower low. You would think that this supply over here, let me mark it so you can understand it better. You would think this supply over here would hold, but actually this is only a build-up. Build-up of what? Build-up of liquidity and trend line liquidity. As you can see, price touched 2 times, third time it induced, then went down, making new break of structures. Now that price took liquidity, induced people to the wrong side. Now what's left for price is to mitigate the demand. Let's look at the bearish example. Price made lower low, lower high, then lower low again, breaking the recent low. The last candle that made this huge move, we already marked it. It is our point of interest. So first step is to identify the bias. Our bias is bearish because the move started and the price started going low, creating low and lower. So lower high, then lower low confirms our bias is bearish. We see that price is creating internal liquidity, going high, then higher low, could not break this low, then going again higher high, breaking this high. We can already see that this is a trend line liquidity. You would think price would continue making higher highs, higher lows until it mitigates the supply, but the price is not perfect. It needs a lot of liquidity to move around, and retail traders are the perfect liquidity on the market. After inducing this buildup of liquidity, price went higher to mitigate our supply, our point of interest or order block, whatever you call it. Now that we have mitigated, we are waiting for this. This 2-letter CH is short for change of character or market shift, as you want to call it. We also can call it break of structure, but the first break of structure is usually called change of character. Now that we have covered all 3 proven steps to successfully trade SMC, let's see chart examples. We have here a good example. We have a break of structure, the recent high. This is the bias. We have higher high, higher lows, then a new high. We need to know the last candle that pushed the last candle that forced the break of the recent high, which is this one. You can mark the both candles or one candle. Now you wait for the mitigation. Now that we have mitigation, let's review the three simple or proven steps to trade the SMC strategy successfully. First thing is we have high broken. This indicates that we are bullish. The bias is bullish. Second step is we have our point of interest marked. Third step, you would think it is missing, but actually we have trend line liquidity here. After breaking the valid high, price created small higher high, higher lows, higher high, higher lows. There is two touch of trend line. The third touch it induced. So this is actually liquidity being crapped. As soon as the liquidity is crapped, the price need no longer any liquidity. But still, before it mitigates our demand, it also created another liquidity. If you can see here, price made sideways build up liquidity, then induce into the mitigation. Now we are looking for an entry. After all three steps are fulfilled, we can go to 5 minutes to look for a trade. Let's see now. We want the price to break this recent high or valid high. Then we will look our new point of interest to trade from. We have a clean break structure. Let's mark our point of interest. This is our extreme demand. We have also another demand here. If you don't want to miss this one, you can do two things. First, you can set two limit orders, splitting the risk, or take the flip demand, which is also fine. I rather risk 1% on the flip zone because price failed to break at that candle, but after candle close, after that candle rejected the high and closed, there was a strong move, which indicates this is a valid flip demand zone. So I am setting my limit order over here. Stop loss at this low. Always give your stop loss a breathing room. Now you can either target any recent high, maybe this high, or go to 30 minutes and target the overall high, because this high is weak and this low is very strong. That's why price is bullish. Price is making higher high, higher lows, higher high, and it will make a new high. Let's see how it goes. Let's go to 5 minutes again and see how it goes. Let it run. Almost hit our stop loss, but we are still in. Making a new highs. Now we are safe to set break even at this level and let the price continue. Let's go back to 30 minutes. As you can see, TB hit. It also created a new liquidity. This is a liquidity build-up. This is not inducement. The inducement is over here. So this is it. If this helped you simplify structure and understand why some trees work and others don't, make sure to join the free Telegram in the description down below. I share daily markups and guidance in real time. And if you are serious about leveling up, DM me mentor and I will walk you through the full system